Hi. Happy New Year, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Happy New Year, everybody. 2025 is here. We are finally into the back half of this awesome, wonderful decade that is the 2020s. And I'm sure the second half of this decade is going to be just fantastic. I hope you guys all had a great New Year. And we are off to the races in 2025. And we're beginning the year. Sadly, we have to talk about this. There was at least one, possibly two terrorist attacks in the United States on New Year's Day. We had two different incidents. The first one, the major one that people are talking about, was in New Orleans. We had 15 people were killed when some lunatic terrorist drove a truck, an F-150 Lightning, into a crowd on Bourbon Street in New Orleans. He got out of the truck after it came to a stop, and he started shooting. Eventually, he was shot dead by police. Good riddance, but not before killing 14 other people. So that guy was flying an ISIS flag on his truck. When he did that, they found pipe bombs and remote detonators in the truck. It's pretty clear that this was a terrorist attack, what happened in New Orleans. The guy appeared to be a radicalized U.S. citizen, no real extensive criminal background or anything. So, there's not really any way they would have caught this. At least nothing that's been reported would indicate that this should have been caught ahead of time. It's just some nut going off. And within an hour of that happening, you had a Tesla Cybertruck exploded just outside of Trump Tower or Trump's hotel in Las Vegas. Now, those trucks, the Cybertruck that exploded, only the driver was killed in that blast. 7 other people were injured, but thankfully no bystanders were killed in that one. Both vehicles were rented from the same rental agency. The Cybertruck pretty much drove several hours directly to Las Vegas, pulled up right in front of the Trump hotel, and blew up within 15 seconds of coming to a stop. So it appears it's not so cut and dry whether that one was a terrorist attack or not yet, because the other guy had the ISIS flag and everything else. I mean, it's obvious what was happening there. Although there's so many similarities here, it seems both were terrorist attacks, and it's just a lousy way to start the year, unfortunately. Look, we've seen all these things happen in Syria and Hamas and Hezbollah. To be honest with you, I'm a little surprised it's taken this long for something to happen on U.S. soil with everything that's been going on in the world. But unfortunately, that's how we started the new year. Also going on this morning, let's get off of that subject and get into finance, shall we? We've got Chinese stocks sold off for the first trading day of the year. It was a pretty big sell-off, 2.9% drop in China's CSI 300 index. We also had the Hang Seng dropping along with that, about 3%. So we've got people moving out of Chinese stocks. We also had a little bit of sell-off in Chinese stocks to end 2024 and to begin 2025. Along with that, we've got big declines in interest rates over in China. Chinese government debt is trading, as some of those denominations trading at the lowest interest rate ever. We've got the 10-year yield right now is 1.613%, an all-time low. And China's 2-year yield, 1.081%. I believe that is also an all-time low. So you got people are selling stocks and people are running to the perceived safety of Chinese government debt. And as they run into Chinese government debt, they're bidding up the price of that debt, and they are bidding down the interest rate because bond prices and interest rates are inversely correlated. So you got a flight to safety going on in China to start the new year. On top of that, you've got the People's Bank of China. We talked about this in our last stream of 2024, how they were printing money again. Zerpenberg spinning back up over in China. $300 billion worth of monetization of Chinese government debt in the last month of the year over there. And so, $300 billion, it's like a trillion yuan or whatever. Basically, they print it into existence. They pump it directly into the bond market, bidding up those bond prices and, again, pushing those yields lower. So you've got a lot of inflationary pressures going on over there, or at least they are inflationary government actions, but it's all being taken in response to a massively deflationary recession in China. Now, I use the word recession. I know the Xi Jinping bots, you guys, you're adorable, who show up. Every time I talk about China, I get this little army of Chinese trolls who comes in and makes all these stupid, unrelated arguments about how China's awesome and, America is falling and the great West Empire, the cutting off, whatever. Paper dragon, I get it. But guys, what's going on? There is a massive deflation problem happening in China right now because you've got asset prices are just collapsing. You've got entire empty cities. We've talked about this at great length on this channel. They're losing people. Their population is in decline. Fewer people to live in cities that are already overbuilt means those prices are coming down. That means people's net worth is falling. That means people have less money to spend. They feel less wealthy. And so the consumer is spending less money, which means Chinese retailers are lowering prices to try to compete for that business. So you've got a massive deflationary event going on in China right now, and the government is trying to fight that with money printing. And the result, you're getting sell-offs in stocks, and you're getting flight to safety in bonds. Also, this big threat of tariffs is looming on the horizon, right? Mr. Orange takes over in a couple of weeks here, and he's largely expected to implement tariffs right away. Well, that's not going to be so good for the Chinese economy either. So plenty going on overseas there. Now, back here stateside, we've got an issue that's coming back. Do you guys remember the U.S. ports? Looks like my picture's getting a little jumpy here. That kind of sucks. Sorry, guys. It's my internet connection this morning. Anyways, U.S. ports and the dock workers, they're sitting down and they're talking again. That issue pre-election never really went away. They did settle on wages, but they never came to an agreement about automation. So we've got that to worry about here. It's possible the dock worker strike could make a comeback. We've got Russian gas is no longer flowing through Ukraine. That deal expired at midnight on New Year's, and they reached no new deal. So that 5-year agreement has come to an end, even as power prices go negative in Germany. Wait, negative? No natural gas and power prices go negative? Yep. That is the cockamamie market that the Germans and the Europeans have created because they have subsidized the hell out of wind and solar. And the problem with wind is you get a whole bunch of power when you don't need it, and you get no power when you really need it. And that means your prices swing back and forth from ridiculously expensive to actually being negatively expensive, where the grid operators need to pay to put the power on the grid because there's too much energy and nowhere to put it. The Europeans really know how to run a power grid, guys. What can I tell you? We've also got 30-year mortgage rates spiked again, just below 7% here, 6.97%. We had a big decline in mortgage applications last week, somewhat expected because, well, who really applies for a mortgage during Christmas? And initial jobless claims were down to 211,000 last week. Again, not a lot of layoffs happen on Christmas week, so not too surprised to see that. Somewhat surprising, though, continuing jobless claims also saw a pretty substantial decline last week. So the job market's looking a little bit healthier. Why don't we shrink my big melon of a head and let's see what's going on in markets this morning, shall we? And hey, don't forget that like button and that subscribe button for the YouTube algorithm so you guys can come back here tomorrow and have your coffee with the melon heads, because we do this every day. Right now, the S&P 500 is up 39 points, about 2/3% higher to begin the new year, looking pretty good before the opening bell. The Dow is up 287 points, also 2/3% higher. And the NASDAQ is up about 0.75%, 153 points in the green this morning, although we were a lot higher a few minutes ago, around 8:45. We started selling off a little bit. Not sure what was causing that. Meanwhile, we've got a stronger dollar, a sharply stronger dollar this morning, guys. This DXY is on a tear here, 108.88, up another 75 basis points, about 0.7% higher this morning. Now, take a look at this longer-term chart of the DXY. I wanted to zoom this out. Now we're looking at daily candles going all the way back to about September of last year. And I just want to key you guys into this area here. Look at what has happened since pretty much mid-September, since the Fed started lowering interest rates, right? Remember when the Fed began to reduce the restrictiveness of monetary policy and become more accommodative or whatever, all those stupid talking points from Jerome Powell? The dollar has just ripped higher since that's happened. And remember, a stronger dollar, guys. The dollar is the denominator in the price equation. When the denominator gets bigger, things tend to get cheaper. We're seeing this put pressure on stocks, put pressure on gold, on silver in particular. And this is also wreaking havoc overseas. We're seeing things like the Russian ruble, the Indian rupee, the Chinese yuan, and the yen again. A lot of global currencies losing power, losing pricing power against the dollar here, threatening to go 109. Now, let's zoom way out here. You can see, guys, this is the highest the dollar has been since November of 2022, since that ridiculous monster run that the dollar had in 2022, when everybody was saying, oh, the Fed pivot is coming, they're going to start hiking rates anytime now. The dollar just went ripping higher on that. So is this possibly, I don't know, is this a sign that inflation is going to make a comeback here? I don't know, because, hey, guys, when we had this big move in the DXY, that was also when inflation was going vertical. Not a good sign here. Keep an eye on that DXY. Now, looking over at the bond market here, we've got yields higher on the short end, lower on the long end. 30-year Treasury, 4.776. That's down almost 1 basis point. The 10-year, 4.553. That's down about 2.5 points. The 2 years at 4.227, down 2.5. And the 1 month is down 2 points. I'm sorry, the 1 month is up 2 points, 4.299% for the 1 month T-bill. Looking over at commodities, we got a lot of green this morning. We've got spot gold is up $21, $2,645. Good day to start the year for spot gold, 0.8% higher. My favorite of the shiny, spot silver, is up 42 cents, about 1.5% higher at $29.33. I like the shiny. Copper is the lone metal in the red here. That's down about 0.08%. Platinum is up 1.75%. Palladium is up 1.3%. And WTI crude oil is at $73 for February delivery here. That's up about $1.30 here, 1.8%. Oil's been quietly grinding higher for about 2 weeks here. We're back into the low 70s. That's kind of happened on no news. Keep an eye on that one. Looking over at Bitcoin here, we've got Bitcoin's a little bit higher this morning, $96,283 as priced on Coinbase. That's up about 2,000 from yesterday. Bitcoin has been kind of range bound for the last couple of weeks. It did pull back after hitting that high of 108, but now we're kind of seeing a little bit of a bounce here over these last 3 days, but still not a lot happening in the world of Bitcoin at the moment. All right, let's talk a little bit about what happened in Vegas and New Orleans here. We're going to go through this too much. I'm not going to spend too much time on this one. New Year's violence rattles the U.S. New Orleans attack and Las Vegas explosion come as authorities have warned of rising threats. Deadly vehicle incidents in a pair of U.S. tourist hubs rattled the country at the start of the new year as law enforcement warned of a heightened threat of extremism and violence ahead. In New Orleans, investigators were still piecing together what led a 42-year-old U.S. veteran to ram a rented Ford pickup into a crowd of New Year's Eve revelers on Bourbon Street, killing 15 in an attack authorities said was inspired by the Islamic State. The guy actually was waving an ISIS flag on the back of his truck when he did this. This is not just an act of terrorism. This is evil. New Orleans Police Superintendent Ann Kirkpatrick said, "We have a plan. We know what to do. We're going to get these people." Hours later in Las Vegas, the deadly explosion of a Tesla Cybertruck outside the Trump International Hotel further stirred fears. Much was still unknown about the blast that killed the driver and left 7 others injured, but officials were investigating whether it too was an act of terrorism. No clear links to terrorism, nothing as overt as the ISIS flag in the Las Vegas attack, but both vehicles were rented from the same app. Elon was assisting the FBI. They were basically able to retrace the steps of this truck. The thing pretty much drove several hours directly to Las Vegas, came to a stop at the Trump Hotel, and blew up 15 seconds later. I mean, that shows pretty clear pattern of intent there. The fact that he got there, as soon as he got there, he blew the thing. But again, no outright links to terrorism on the second attack. These two things happening within such close proximity, rented from the same company, though. It's looking like a sleeper cell was activated here. Apparently, the FBI has been zeroing in on an area in Houston where this cell may have been operating out of. If we get more information, I will let you guys know, but it's kind of a lousy way to start the year, but it is the 2020s, folks. Now, looking over at what's going on in China here, Chinese stocks tumble in the worst start to the year since 2016. Data showed Chinese manufacturing activity slowed in December, and investors are likely preparing for greater uncertainty in 2025. Chinese stocks posted their worst start to the year in nearly a decade as investors brace for economic uncertainties with weaker than expected manufacturing data and an anticipated hike in tariffs. The CSI 300 index closed down 2.9% on Thursday, its steepest drop on the year's first day of trading since January of 2016. And the Hang Seng China Enterprise Index slid as much as 3.1%. I'm going to scroll down here as economic concerns linger. China's 10-year bond yields hit a fresh record low on Thursday. The People's Bank of China injected massive liquidity into the market at the end of 2024 without using higher profile stimulus as officials preserve policy space before Trump's return to office. We talked about that a lot on the show on Tuesday about how China was pumping so much money. They were using reverse repos as well as outright monetization of debt, QE, to try to pump liquidity into markets. Now, let's look somewhat at the results here. First of all, here's the CSI 300, the China stock index. All right, here's your sell-off that happened on the last day of the year and the first day of 2025. We've got that 2.9% sell-off that just happened yesterday or today, depending on which side of the pond you're on. Now, we've been kind of like trading in this range ever since that initial hysteria about China's stimulus, right? We had this ridiculous run-up in Chinese stocks that happened all through September into the beginning of October. Chinese stocks were just ripping higher. Finally, they were going to do all this massive stimulus program. Everybody was calling a bottom in China. That kind of ran its course, and now we've been bouncing around at this level ever since. But it looks like now we might be threatening to take out this bottom and maybe even be headed a little bit lower here. The threat of tariffs remains a big question mark here, guys. Now, let's look at what's going on in the Chinese bond market. Check out the 10-year yield for Chinese government bonds. These are daily candles going back to about October, November of last year. And we're just doing nothing. That's just a lot of red, guys. I mean, it was falling all year last year, all right? So this trend is nothing new, but look what happened all of a sudden in the middle of November. This thing just started taking a dive. And that's pretty much when the Chinese central bank really started kicking into this high gear with stimulus, when they started buying up more bonds. And you can see how the yields started going lower. Buying up bonds raises those prices, sends those yields down, and these candles are getting bigger as we go. And this is just the 10-year. We're now at an all-time low of 1.613%. Now check out this one. Shout out to Macro Alf on Twitter or X, depending on whatever you call it. This is China's 2-year government bond. And you can see that one also, since pretty much the fall, this thing has just been heading straight lower, going vertical as we go down here, 1.081. We are now lower than levels seen during the GFC when we were pretty much at this same area, all-time lows for Chinese government debt. All right, that is a flight to safety happening in China, guys. Things in China are not getting better. I know you got all these China trolls show up in the comments and talk about things are number one in China. America's going to fall. Yeah, I get all that. And there's people just want to call bottoms because the central bank is trying to print money and everything. But the problems in China's economy, in my opinion, are just too big. They're not going to solve a problem of overbuilding with more building and more stimulus in order to stimulate loans to pay for more building. They need to stop building. And how do we put this in a family-friendly show? I don't know. It's time for less pants and a little more booze in China. You guys got a problem. You got too many buildings and not enough people. And I don't know. I'm just going to throw this out there. Maybe stop building buildings. And I don't know, guys, girls, you know what to do. I mean, do we need to explain how this works? But, you know, we know what causes babies these days. Science has discovered what causes babies. So I'm beginning to think there's a simple solution here, and it's not print more money to build more buildings, all right? You guys need less buildings, more babies. That's going to fix your problem. Until you address those concerns, it's going to keep getting worse. I don't care what the central bank does. All right, that's my master class in demographics for the day. I think we can move on for that one. U.S. dock workers, import employers set to restart talks next week. This is a holdover from the pre-election day. Remember when the dock workers, remember that guy with all the ridiculous gold jewelry and giant rings for that union guy for the longshoreman? What did they call it? The working class hero starter kit. And it was like $20,000 worth of gold that the guy was wearing. Well, they never really went away. They just put everything on hold for the election. And now, well, the election's behind us and they're picking this back up. Let's see. Leaders from the U.S. Dock Workers Union and the group that represents their employees are set to resume contract talks on January 7th as the threat of a strike looms, according to a person familiar with the negotiations. Is he related to that person familiar with the matter? I don't know. The names are very similar there. Facing a mid-January deadline to reach a deal, Tuesday's planned talks are a welcome sign for importers and exporters bracing for a labor disruption that would shut every major port on the U.S. East and Gulf coasts. The gateways account for roughly half of all the country's container volume, according to data compiled by the American Association of Port Authorities. This is showing all of the ports that would be affected by a hypothetical strike if it were to start up again. But the issue of now, look, the port deal, they reached a deal. What's going on with my mouse here? Union dock workers, they were threatening to walk off the job on October 1st. That's behind us here. Now, they settled this deal with a big raise, all right? The issue of whether employees will be allowed to add semi-automated machines to port terminals under the next labor contract may once again prove difficult to resolve. In early October, the International Longshoremen's Association reached a tentative deal with the ocean carriers and the terminal operators on a 62% wage increase over 6 years. Must be nice. Suspending a 3-day strike, but leaving the technology issue unresolved. Now, that's the issue here. It's the issue of automation. They already got more money. Now, the question is, are they going to let robots displace human workers? Now, I hate to see people losing jobs, guys, but here's the fact. If you want the U.S. to be competitive, you're talking about other countries where one guy behind a computer terminal is doing the work of 20 or 30 people here in the States. At some point, you got to modernize, right? At some point, you got to get out of the way and you got to let progress happen. I hate to see people lose jobs. It's easy for me to say because my job is not on the chopping block, but I have worked at a plant that closed before. My wife and I both lost our jobs on the same days. I get it. It sucks. I know what happens when that happens. But, you know, look, all the blacksmiths lost their jobs, right? We don't have blacksmiths with a hammer and anvil making freaking horseshoes. Like at some point you got to allow progress here. So I don't know what the ILA is really hoping to get out of this. You can slow down the automation, but you're never going to stop it outright. Now let's talk about this one. We talked about this in the build up to it. Ukraine just stopped Russia's gas flows to Europe. Here's who's most at risk. We spent a few days talking about this before it happened, so you guys should be somewhat familiar with this. Ukraine halted flow of Russian gas to several European countries on New Year's Day, bringing an end to Moscow's decades-long dominance over Europe's energy markets. The widely expected move marks an end to the 5-year transit agreement between Russia and Ukraine, with neither side willing to strike a new agreement amid the ongoing war. Austria has insisted that it is well prepared for the stoppage, but Slovakia's Prime Minister Robert Fico has threatened to cut electricity supplies to neighboring Ukraine. It looks like Slovakia is going to be the hardest hit by this. They get most of their energy from these Russian pipelines via Ukraine. And so if they have no natural gas, they're not going to have any extra power to sell back into Ukraine. And so Slovakia is pretty much threatening to retaliate here. You've also got countries like Romania, Moldova are going to be affected. Even though the Nord Stream pipeline was blown up, you still have a lot of Russian gas was making its way into Eastern Europe. That is no longer a thing. And in a somewhat counterintuitive follow-up to that story, German power slips below zero as the negative price phenomenon grows. It seems the Dunkelflaut has given way to, I don't know, is there a German word for what do we do with all the power this windmill is making on a windy day when none of the factories work because they're all shut down for Christmas? I don't know. What's the German word for that? I'm sure it sounds really nice. German power prices dropped below zero on the first trading day of the year, an increasingly frequent phenomenon in Europe as renewables expand. Intraday prices in Germany, the region's biggest market, turned negative during 4 hours overnight as wind energy output reached as much as 40 gigawatts, far outstripping demand. The continent's power markets experienced record periods of negative prices last year as rapid growth in wind and solar capacity boosted generation. Germany notched up 468 hours, 60% more than a year earlier, according to data from Epic Spot in France, where that's 468 hours of negative power prices. In France, below 0 hours more than doubled to 365. Now, they got this chart here in this Bloomberg article showing some of these countries. The UK had 179 hours in 2024 of negative power prices, up from 106 in 2023. France, 356 hours of negative prices, up from 144 a year ago. Germany, 468 versus 292 a year ago. And Spain's getting in on the action now, 247 hours of negative power prices versus 0 a year earlier. Now, you guys might be saying, oh my God, look, we've got so much power, we're practically giving it away, right? Like a Crazy Eddie ad for electricity. No, this is not a good thing. All right. This means the power grid is at risk of going down because there's too much juice being pumped into it. Prices go all the way to zero to the point where the operators tell the windmills, you have to pay us if you want us to take this power now. Now, what happens? The windmills, which are getting subsidized by the freaking government, they're still profitable. They can say, okay, I'll pay you to take my power because the government pays me even more to sell it to you. Well, the natural gas plant, the coal plant, the nuclear plant, they can't do that. And so they have to shut down because they can't afford to operate at a loss. Well, that's great when the wind is blowing. What happens when the wind stops blowing? When your dunkelflaut hits, I laugh every time I hear that word. No, a dunkelflaut is not an incomplete flush. A dunkelflaut is when there's not enough wind and the windmills are basically just high-priced paperweights sitting in the middle of the field. Well, then you need your coal plants and your gas plants and your nuclear plants. Oh, crap, they all shut down because of the negative power prices. Now we have no power on the grid, and you fluctuate back and forth. It basically creates conditions like you got with that Texas deep freeze in 2021, I think is when you had the Texas deep freeze. It basically creates that, but on the whole continent, they are destroying their power grid here. And, I'm sure I'm going to get some greenie in the comments are going to be like, well, just make batteries, just store the power. It's not easy. Power storage is expensive and it's inefficient. You lose power when you store it and you lose power when you take it out of storage. Not to mention the fact that the lithium mines for those batteries are freaking terrible for the environment. The whole point is we're supposed to be helping the planet. You're making things worse. Anyways, all this is going on as Europe continues to deindustrialize. We've been talking all about factories shutting down in Germany. They're just making such a mess with their power grid over there. I don't know how else to put it. You can't put children in charge of keeping the lights on, guys. There are consequences of that. Also going on in the U.S. today, mortgage rates. We got this data this morning, 6.97% for the average 30-year mortgage in the United States. That is up from 6.75% a week ago, almost back above 7%. Interest rates, remember, guys, they started lowering them in September, mid-September, when they were, 6.13. Now they're almost 7%. I keep saying this, but interest rates are heading lower. Just somebody forgot to tell interest rates. Remember how everybody was like, oh, the Fed's going to start cutting soon, and that means housing is going to go up because mortgages are going to get cheaper. Nope, not how that works. Fed only controls the overnight rate. The Fed does not control the 10-year, the 20-year, the 30-year, or the 30-year mortgage, which is still getting more expensive. Mortgage applications also plummeted last week. Kind of expected. It was a Christmas week. Mortgage applications in the U.S. plummeted by 12.6% from the previous week in the period ending December 27th, stretching the 10.7% plunge from a week earlier. I'm not going to put too much stock in this data point. It was Christmas week. I would expect mortgage applications to go down. There was a big drop in refi applications. Again, I don't know how much of that is the phenomenon of higher interest rates and how much is just nobody refinances their mortgage over Christmas week. So we'll see what that looks like over the next few weeks here. But higher rates are certainly not good for this frozen housing market. We're seeing rates are rising, inventory is climbing, and yet somehow prices remain stubbornly high. Sooner or later, one of these things has got to give, guys. It's going to happen. Also, we got jobless claims data today. Initial jobless claims for the United States for the week ended December 28th, 211,000. That is below expectations and down from the 219,000 in the prior week. Once again, though, Christmas week is, you got the Christmas holiday in here. People try not to lay people off during Christmas. You try not to fire people during Christmas. So not putting too much stock in that data point. Now, one data point that is kind of sticking out a little bit here, continuing jobless claims. We saw a big drop in continuing claims. I don't know if that is people not reporting because of the holiday, or did all these people suddenly get hired for Christmas? 1.84 thousands or 1.84 million, down from 1.91 million in the prior week. Pretty big drop there in continuing claims. Again, the holiday there, I just don't know if that's playing a big role or not. And guys, one more thing I want to talk about, the overnight reverse repos. We talked about this last week, 473.4 billion. Big jump from 263 billion. Largely expected, guys. I'm not at all surprised to see that. It happens at the end of every year. We're probably going to see this come down sharply today, and it's probably going to fall for the next several days and eventually settle below 100 billion where we were before. No big surprises. I did have a couple of people send me this data point in emails and tweets, say, oh my God, what's going on here? We've seen this before, and it was pretty much expected. And I just want to say thank you so much to Chuck G, who says, if you want to know about more T attacks, watch Sarah Adams on the Sean Ryan show. It's eye-opening. The T20 2025 attacks have started. I am not familiar with either of those names, Charles, but thank you for the plug. I will look into those. Again, I've never seen either show, so I can't comment one way or another on that. I can say, guys, look, we just saw the collapse of the Assad regime. I didn't mention it. There was an attempt on Assad's life over the weekend. They tried to poison him in Russia. I'm not surprised, right? Syria, Iran, Hamas, Hezbollah, all like basically ground zero for radical Islamic terrorism is all in flux right now. Everything is a mess. Iran is in full retreat. Three of their proxies have just been obliterated: Hamas, Hezbollah, and now the Assad regime. So, I mean, Iran is on its heels. ISIS is not really an Iran satellite at all. I mean, Iran has actually been fighting against ISIS. So I'm kind of surprised to see ISIS acting up here and not the Iranian-sponsored proxies, because I don't know. Maybe I'm splitting hairs here, because maybe they hate each other, but they all hate us even more. So I guess I'm not too surprised there. I am surprised how long it's taken, though. I was expecting something a lot sooner than this. Let's put it that way. Thank you, Charles G., for the super chat. Thank you, Jana Williams, for the super sticker. I appreciate the support of the channel very much. The super stickers don't come up, sadly, on StreamYard, but I'm seeing a big pear-shaped number 1. Is that supposed to be me? I don't know. Digging the headband there, though. Thank you, Jada. Appreciate that very much. Grandpa says, all business owners, S-Corps, and LLCs, you have until 1/13 to file your beneficial ownership report or face a $10,000 fine or jail time. That is the rule as written in the, what is it called? The Truth in Finance Act or something like that. However, that is still up for debate in court. The courts have ordered the suspension of that deadline. The law says yes, but the court has said no while we settle this. So, I mean, the safe method here is to file the report if you want to avoid the fine and jail time. Unbelievable. Like, you're going to throw people in jail because they didn't report that they have a 10% ownership stake in some lady's Etsy business or Etsy business. It's stupid. Whatever. It's government overreach. The idea is that they want to fight money laundering. Are they going to fight money launderers, or are they going to fight small business owners? We'll see, because small business owners don't have lobbyists and the big outfits do. I'm not a big fan of this beneficial ownership thing, but I'm also not a big fan of $10,000 fines and jail time as well. But watch that January 13th deadline and watch those court rulings on that subject. Thanks a lot, Grandpa, for supporting the channel, sir. Also, guys, I just want to say thank you so much to all 60,000 of you wonderful melon heads out there. We hit the 60,000 threshold with a few hours to spare right before the end of 2024. I did want to hit that threshold before the end of the year. I love those big fat round numbers, and we did. Special shout out to my buddy Jesse Day over at the VRIC Media channel. He posted that interview that I did with Miss Melody Wright over on his channel, and we got about 100 subscribers out of that interview, and that's what put us over the edge. So welcome to you new guys, as well as thank you to everybody who was here already, especially you folks going all the way back to 2022 who have been there since the beginning. I appreciate you guys. Thank you so much. And that's all we got for today, everybody. Thank you guys for the super chats, for supporting the channel. Also, thank you to my Patreon supporters and magnanimous melonheads on YouTube. Just a reminder, guys, we're getting together on Friday for our weekly Zoom call this week because of the holidays. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.